Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, welcome back to another episode of the Real Estate Investing Club. Today we got Larry Hoffman with us from ljhinvestments.com. Larry, I forgot to ask what that acronym is for, so you're going to have to correct me after this. But Larry is a note investor, and we love having note investors on. It's a really intriguing strategy to invest in real estate, the most passive of all investment strategies. So I absolutely love it. Super excited to jump into this. Larry, thank you very much for hopping on the show.
Hey, thanks, Gabe. I really appreciate you having me on the podcast. Looking forward to talking to you and your audience.
Absolutely. So what does LJH stand for?
It's my initials, Lawrence Joseph Hoffman. Yeah, pretty simple.
Go.
Very original, right?
I like it. All right. Well, hey, I told you before we got on here, we like starting with stories. So take us to the beginning of your real estate story. How'd you get started in real estate?
Yeah. Well, I started back in 2006 is when I officially formed my corporation, but it actually started a little bit before that, back in 1996. And I don't know if your guests are going to be able to see this or not, but I have my Carlton Sheets No Money Down course, and
Nice.
I actually have.
Are those cassettes? That's awesome.
I still have the cassettes in it. And it actually has the date I began my courses, January 6, 1996. You believe that?
That's fantastic.
Yeah, it's crazy. So I started officially back in 1996, but it literally took me 10 years to form my corporation. And you hear this analysis of paralysis, and that's exactly what I had. But ultimately, I wound up starting back in 2006 when I formed my corporation. Started out wholesaling a few deals. Then I eventually went up to rehabbing houses. And so I was doing about anywhere between 3 to 8 houses a month. And so I started out, getting my own bank financing and things like that. And then I eventually hit a cap. And then that's when I started looking into private money. And then a whole other world totally opened up to me with not only rehabbing homes, but also buying other, like 4 families. And, I owned a couple of 12 units and things like that along the lines. But ultimately, it started in 2006, and then, when the housing market, when the economy crashed and the housing market crashed, I literally about lost my shirt. I had about 10 houses, 10 properties going to foreclosure, and
man,
yeah, so it hit me. I basically took my eye off the ball on that, and I made all my private lenders whole. But unfortunately, with the bank financing, I literally had 10 properties going to foreclosure. And with that, I lost those 10 properties and I lost my marriage on top of it. Right. Oof. So it had such a negative impact on me. And then that's kind of like that's when I really kind of pivoted towards, buying notes and really just going down that road.
Yep. Yeah, that 2008 financial crisis, that hit so many investors so hard. We've had other guys on the show who also went through a tough time. But I love when you guys come on because it shows that you went through the tough times, you hit the trough, and you came back up. You're on the other side, still in it, still kicking ass, and show it. So that's a good message for everybody out there. A lot of people are going through a hard time now. Interest rates are going up. Some of your notes are coming due and you're not able to finance those with better debt. Right. And so even if you do go into foreclosure, hopefully you don't, but if you do, it's not the end of the world. You can come out of it on the other side. So great to hear. And it also makes sense. It sounds like, the words you used were you took your eye off of the ball and you had to go into foreclosure, and that kind of brought you to note investing. Right. So take us to the transition. Like, how did you actually find note investing and how did you get educated and start buying up notes?
Well, I always I knew about note investing because it was Russ Whitney, I think it was. He had a course some time ago that with notes and things like that, but I didn't really fully understand it, right? So in between when I with buying the houses and going into notes, I did a few other things in between, like started an ATM business and, all these
ATM
other
business. Interesting. Okay.
ATM business. Yep. And so, but eventually, like I said, I knew about the notes. And then eventually, I found some really good books on the topic. And then I eventually found a mentor that would actually mentor me within this space. And it made a huge difference for me.
Yeah. Getting a mentor, I feel like it's probably the number one thing you can do to make your career go in the right direction and to miss those steps, those missteps that so many people run into. Just getting a mentor, somebody who's been there, done that, just be able to show you the direction. They're not going to take the action for you, but they can show you where you need to go. Super
100%. And that was the thing. It's early on, and that's what I knew about it, but I didn't know about it, if that makes sense. Right. So there's just so many different little nuances within this note space that it was just nice. And I'm still friends with him today. We still keep in contact. And so it's nice anytime that if it's something that I don't understand, I'll just reach out to him and then we'll have a 30-minute call to kind of discuss it. But, it's great. And then, I have another mentor where she's been in this industry for about 30 years.
Oh, wow. That's great.
Yeah.
So before I do want to jump into the nitty gritty of notes, but you said ATM machine business, and that's really intriguing to me. So how did you get into that? How did it run? Is this like the ATMs that are non-branded ATMs that you just see in
Yep.
I don't know, just random places?
Yeah. Essentially, good Lord, I think I saw something on Facebook of all places, right? And this guy was promoting an ATM course, and I was intrigued by it, and I actually signed up for the course. And I'm like, well, this can't be too difficult. Well, so I eventually wound up buying the machine, negotiating with the different like convenience stores, clothing stores. I had a barber shop, had a tattoo place, and so you get all these under contract. The big thing, though, the big pain in the neck for me was having to go to these places to fill them up. So I was filling them up with $1,000, each spot. I'm using my own money, and so I put $1,000 in each one, and then it would ultimately be used, right, with people withdrawing the money. So I would have to go back at least anywhere between, depending on the location, right, every week or every other week to fill this up. And that's why, I'm like, man, this is just way too much work for me. And then that's when, I'm just going back into real estate, because I know real estate extremely well. And, I can have more bang for my buck.
Yeah. Yeah. It's that shiny object syndrome, right?
Yeah.
You hear of these different business ideas and you're like, oh man, that sounds fun. Let's do that. And then you get into it and you're like, okay, I got to focus in. I got to get back to real estate. This is the way to go.
Oh yeah, it's like it's that dog chasing the squirrel, right? It's that new thing, and that's some of the people that I talk to, beginning investors. They same thing. They have a course that they're working on, and then another course comes out, and they just totally stop what they're doing on that, and they pivot. I'm like, no, just get that one thing, humming, and then once you get that one thing humming, rocking and rolling, you're making money. Then switch over to the other thing, and then hire VAs to help you to really get this thing moving and grooving, and then then pivot, and then work on that other thing, but get that first thing going and going well.
Yep, absolutely. You got to have the discipline to make sure that don't switch courses until you've made the first course work the way that you're expecting it to.
100%.
So, love that. All right, so let's talk a little bit more detailed about note investing. I've had a few guys on here, and that's the extent that I know about note investing. I've sold properties on contract with seller financing, and so I have my own notes, but I don't know about the investing aspect of it. So, give me the 10,000-foot view. How does it work? How do you find your notes? And just give me some details.
Yep. Basically, when I find the notes, I do. I have relationships with banks and hedge funds and other note investors. And there are other platforms, for example, like PaperStack, that paperstack.com. If you go out there, you can actually find notes for sale. So, typically what'll happen is I'll get a tape in or a pool of, 30 to anywhere. This last one I got in had 275 assets on it.
Hmm.
So,
And is that a varied type of asset? Is it like commercial, industrial, anything in between, or is it just residential?
Commercial, residential, condos, land. So
Okay.
they vary. And depending on the source that you get them from, they're either all commercial, all land, or all real estate. I have other sources that are like a mix of, I have a contact at a very big bank that he'll send me commercial deals, maybe like once in a month. Right. And so they send these in, and then I look at it, and then, what I like to do is I like to see what kind of rate that's coming in. If it's the state, I have 5 states I typically buy in: Ohio, Michigan, Indiana, Pennsylvania, more actually South Carolina, North Carolina, and Texas.
Okay.
So, I look at those, 6, 7 states right off the bat. So I sift and sort, look at anything. If it's anything $200 and below, I just, filter that out, put that into another bucket, because those are.
You mean $200 value, like the value of the.
Yeah, $200 principal and interest coming in.
Oh, okay.
Yeah,
okay.
The monthly payment.
Monthly, yeah. Okay.
And
so, like, why is there a $200 value note? That's ridiculous.
Yeah, and those notes, they typically, I just bought 3 of them with each of them having a balance of about $13,000 to $14,000.
Oh, right? Wow. So okay.
I purchased all 3 of those in my self-directed IRA, and I also purchased like 8 or 12 others in my self-directed IRA as well. So when they have a low balance and or a lower payment stream, I typically buy those in my self-directed IRA. When I have $200 or more, I typically use private money to take down those assets. And either I can buy one or I can buy a pool, and I'm in the process of actually creating a syndication right now.
Very cool. Very cool.
Yeah.
So you reach out to bankers, and I'm assuming these are just the big banks like Chase, Morgan Stanley, those kind of, well, I guess not Morgan Stanley, but the big banks out there. You have contacts in those companies. You reach out to them. You get the list of assets that are non-performing or performing as well.
Both. Now they're not like I just have one contact at a very big bank.
Oh, okay.
So this is he typically sends me the non-performing notes, but usually on the other ones, I usually get like a smaller regional bank that sends me their non-performing, performing loans. And then you have the hedge funds that they typically, when they buy them, like the banks will sell them to like BlackRock, and then BlackRock will sell them off to, whoever. And then like these other hedge funds, those are the company that I'm buying them from as well. So they've already sifted and sorted, and they've already went after that low hanging fruit. And so everything else, they're just looking to offload.
Yeah.
So those are the contacts that I have in conjunction to that one bank that I have a pretty good contact with.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Okay. So to kind of get this business started, it really comes down to relationships. Like, you got to pick up the phone, start calling contacts at banks, and see 100%. If they have any notes that they're willing to offload.
Yeah. And that's where, a lot of people, they talk, when they call, they'll call and ask for the REO department. You need the special assets department to speak to somebody. And typically, even before doing that, I always use LinkedIn to start my search. And just, you can just look for wholesale traders special asset managers, and just do a connection request, and develop a relationship with that person and tell them what you're looking for. Give them basically your 30-second elevator speech. And and then once you get established that connection, then they'll start sending you over the tapes. Or if they don't know anybody, if they don't have anything, they know somebody. So I always ask, if you have anything for sale that you're looking to sell this quarter or next. And then they go, no, I don't have anything, but I can't tell you how many times. It's like, oh, thanks for reaching out to me, or thanks for letting me know. But would you know anybody else that would have something?
Mm-hmm.
And then,
that is the best question on, even like when you're talking to sellers of assets, like when I'm calling a self-storage facility, I'm like, hey, do you know anybody else? Because so many times they do know other people, and it's crazy how that works.
100%.
Nice. So once you get in contact with the bank, representative, they have assets that are available. How do you, what's your buying criteria? What do you look for when you're looking at these notes? Outside of, you're talking about the balance, $200 or more. What else are you looking for?
Yeah, typically like on a performance, what you have is you have two buckets on these assets. You have performing and non-performing. So typically on the performing notes, I like me personally, I like to have at least a 15% yield on my money, right? So, and then that, you base, a lot of people use this formula to, you take a percentage of the UPB, the unpaid principal balance, to figure out what they're going to, offer. I like to look at the yield to maturity over the length of the loan. So I base, on the performing side, I base it off the yield, and then I base it also off the states that I buy in. I don't buy anything in New York, New Jersey, or Cook County, Illinois. And then I also filter on anything that's greater than roughly about $25,000 or more, $25,000 up to about $2 million in unpaid principal balance or legal balance. Let's see, anything greater than really about $250 a month principal and interest payment. So once I get those, then I'll start sifting and sorting those, and then running my calculations, and then see if that fits within my buying criteria. And then I also evaluate on those deals. I'm typically using private money to take down those loans. So what I do is I like to, when people invest their private money with me, I usually have it out between 2 to 3 years. So I do a 3-year projection to make sure when I buy this at X and I sell it at Y, there's still a profit to be made, and that that profit is going to cover that investor's investment, and plus give me a positive cash flow on the end, right? But when it comes to non-performing notes, what I typically like to do, and that's where non-performing is a totally different beast in and of itself, because you have anything less than a year. I usually try to get
real quick before we go into non-performing. Why would a bank want to sell something that's already performing well, has a good interest rate, all that kind of stuff? Why would they want to offload it to you?
Yep. Typically what will happen is they've already made their money, because with an
amortization. Oh, right. The interest. Yeah. Mm-hmm.
Yeah. When you make the loan, you have all those closing costs, all those initial costs. And then it's all front loaded with interest. Because when you look at the amortization schedule, there's a sweet spot of about 12 to 15 years where it's all loaded with interest. And then what is it? It's that law of diminishing return, where it starts tipping over, where it starts about that 12.
You're paying more principal than interest.
You're making more principal. Yeah. So and a lot of times that's why a lot of with the banks, you'll get, especially with these HELOCs, they'll have a little clause in there that, hey, we want you to hold this thing. You can't refinance this between 3 to 5 years, because they're going to hold on to it, right? Make a little bit of money. They've already made the money, a lot of money up front, but they're going to make a little bit more, and then they're going to sell it off.
Yeah, that makes sense.
Yep.
Okay. That totally makes sense. And it's actually kind of, so I'm sure there's many calculations that go into you figuring out what your return will be if you're looking at an amortization schedule past a certain point. I mean, if they're paying more principal and interest, then I'm sure there's, I don't know what the calculation would be, but I'm sure it's there. You got to really be detailed about what your return should be.
Yeah. And that's why, you see a lot of people, other note buyers or other note people that teach in this space, talk about the percentage base, run your, I'll make your offer based off percentage. I like to base it off the yield and maturity. So that way I like to look at the overall course of the loan, and I want to make sure that I get anywhere between 13 to 15% on that performing note, right? So I look at that course, the overall course of the loan.
Yep.
So that it's vitally important to actually do that. And now with the non-performing, that's when you start looking at how long has it been since they paid. If it's about a year or greater, and if there's been some attempt to make a payment within the last year, I'll usually try to get them to do a loan modification, so that way I can modify that loan and get them reperforming. And then when you get that loan reperforming, and it's reperforming for 3 to 4 months, it becomes a performing loan, and then you can sell that in the market for a much greater percentage than what you bought it for.
Interesting. Okay. And so do you also look at non-performing loans in terms of the asset itself? Like, so you're assuming that it's just going to continue to non-perform and it'll eventually go into foreclosure and you'll be able to take the asset back. Yeah, that's another strategy that you use.
Yeah. Because when you look at the non-performing, because what you do is you have to break it up into, these are the ones that you think you can get modified, right? When I evaluate them, I'm looking anything at about a year, from like a year past in the
since the previous payment was received.
Right. Then I have a really good chance of getting it modified. But anything when you start getting over 2 years and then on, more than likely you're going to have to foreclose on it. But what I like to do is any asset that I get, whether if it's a non-performing note, now if I know I can get it modified, or if I think that I'm going to have to foreclose on it, on that one that I'm going to foreclose, I'm still going to try like hell to get it modified, because foreclosing is the very last thing that I want to do to somebody.
Yeah.
There are other investors that specifically buy these assets to buy it, to take it back and add it to their rental properties, add it to their Airbnb. That's just not my strategy. Just having gone through the foreclosure process with those properties, I know how stressful it is. So I try anything and everything to help that borrower stay in that property. As long as they're communicating with me, I will bend over backwards to help them. Yeah.
Yeah. And that's, foreclosure is definitely not a pleasant experience to anyone involved. So it's the last resort. But it is something that can protect your own investment if they continue to non-perform and there's no attempt from their end to try to make the note whole again. So yeah, that makes a lot of sense. When it comes to managing the note, what is the strategies you guys use? How do you do it? What's the communication like with the note holder, or the note? What do you call that? The mortgagee, I guess.
The mortgagor.
Mortgagor. Okay.
Yeah, the mortgagee is the lender.
Okay.
And the mortgagor is the person giving the mortgage to the bank.
Okay.
Essentially what we do is we have third party servicing companies like Madison, FCI, Kobe Financial. These are just a few. There's a lot of them out there. But what they do is they when you buy a loan from a previous note holder, so say you had a note and you had it serviced with Kobe Financial, where you're going to send a goodbye letter to your borrower, and Kobe Financial is going to send a hello letter, letting them know that they're the new servicing company. If you had it like at Madison, I'm switching it over to Kobe, there's a hello goodbye letter. So the servicing company handles all the correspondence between the borrower and, making the payments. They send out all the required documents at the end of the year. Whenever there is a lapse in payment, they start the outreach to get them like, hey, what's going on? But typically what I like to do is not only in conjunction with the servicing company, I also send out a letter when I actually buy it and it's actually there at the servicing company, just to introduce myself. And, I have a picture, I have information about my company. I'm actually in the process of doing a DVD, just so that way they can or even like a link that they can just go to YouTube and just watch it, so that they know that, hey, I'm a real guy, that, this isn't something that's some type of scam, just to let them know what's going on. So that way it's like all the communication really typically goes back between the servicing company. And then as a side note, I do buy notes that are in bankruptcy, chapter 13 and chapter 7. So chapter 13 it's really, you can kind of look at it as a performing note, right? But the caveat with that one is if they're still in that negotiation phase, you have to go through the trustee, you have to, or their attorney, to have all communications, but
Okay.
until you get the okay to talk to the borrower. And I bought 7 properties that are in bankruptcy. And I initially started the conversation with the bank or with the attorney. And then the attorney just said, it's good for you just to go ahead and, talk to the borrower, because looking at their financial statements and then looking at the current payment that I had, it just looked to me like there was no way that they were going to be able to afford that. So I immediately tried to reach out to them and start a loan modification. So like I said, I'm really trying to set people up for success with this. The foreclosure is the very last thing.
Yep, absolutely. Do you have a servicing company? With my own seller's finance notes, I have had good companies and very bad ones, and bad servicing companies are a nightmare to deal with.
Yeah.
Do you have a specific company that you could recommend to the listeners?
Yeah, I would recommend Covey Financial. Yeah, if you go to coveyfin.com. Now with Covey, he's only licensed in and if you go over to his website, you see it like licensing, or I think it's About Us, and then license. And then you'll see the ones in greens where he's licensed, and then the one in yellow is where he's getting licensed. So whenever I buy the notes within those states, I usually move it over to Covey. Eric Covey is the owner of Covey Fin. Really good guy, really great company.
Very cool. And how do you spell Covey? Is it Kobe?
Covey.
Oh, coveyfin.com.
Yeah.
Got you. Okay. Cool. That's a good reference. I've dealt with bad servicing companies, and they're just a nightmare, because you got to be, like, I was on hold for like 3 hours. I don't know, very long time one time, and it just annoyed me. And
well,
so you get a good company.
I'll tell you one thing that I've heard. That's the thing. You hear bad things about. I'll just say I heard bad things about Madison and then also FCI. But my experience because I have loans boarded with both these companies, and I'm telling you, I've never had a bad experience with them. Every time I've called, I've always got a representative on the phone. They have always been very helpful, with that loan that I have, and giving me the entire backstory and the conversations that they've had with the borrower, and just all this stuff. And it's like a restaurant, right? You're going to have a good experience or a bad experience, depending on the waiter or the waitress that you have.
Yeah. Yep. Absolutely. All right, cool. Well, hey, man, I took a peek at the clock. It looks like we have run down our time, so it's time to jump into the quick question round. Are you ready?
I am.
Let's do it. Starts with books or any form of education. Give me 2 recommendations, one for general life wisdom, and then one for real estate or business specific.
Well, I'm telling you, the one that really came to my mind, I've got this one up, and it's Invest in Debt by Jimmy Napier.
Okay.
And
all right.
Really good book. This is the one that kind of started it for me, right? Along with the Russ Whitney. But another really good book that came out, I think it was like 2013 or something, or 2020. It's Invest Like a Bank, and that's by Bo Glass.
Okay.
And this one, I'm telling you, this is a really good book for your listeners if they're interested in doing anything. Definitely check out those 2 books. It'll be enough to get you started. But ultimately, I think ultimately you will have to reach out to somebody that is doing this on a regular basis, that can kind of help guide you through some of the pitfalls. But those are really good books. And then I guess with business, I think the 4-Hour Work Week, I think that's a typical one that a lot of people recommend. And And I'm telling you, it's been crucial for me because early on, even with my investment in rehabbing properties and things like that, having a VA makes a huge difference. It's something that you can offload the things that you don't like to do, and you concentrate on the things that you do want to do. And I have a VA right now, so she does pretty much like 85% of the things that I don't want to do. And the 15%, or, like 80, 85, 10, 15%, it's focusing on trying to raise private money and creating my syndication. So that way I can take down bigger pools of asset.
Nice. Yeah.
But,
yeah.
Oh, I'm sorry. What were you going to say?
I was just going to say, yeah, having a good VA on your team it's just so worth it. If you guys don't have one, reach out, get one, go to Upwork, find a good VA. They can definitely expand your ability to work in your business.
I'll tell you a really good place that I found my VA at was at Fiverr.com.
Yeah, Fiverr's another good one.
Yeah,
Fiverr, I found they're more specific to a specific job. Upwork, it seems a little bit more general, but they both work really great.
And then one real quick one. A non-technical book that was really helped me when I was going through everything that I went through. It's Surrender by Father Larry Richard, and a really good read. And it really puts things in perspective on what's important and what's not important.
Very cool. I love it. All right. Next question is for your younger self. So let's go back to the Larry who, before he started investing notes way back when he got that course, I think you said 1991 or 1996. Go back to that, Larry, look him in the eye and give him one piece of advice moving forward.
Yeah, I would just say, just do it. Just get out there and just take action. And the other thing that I would say is actually find a mentor, because that will dramatically increase your odds of being successful. Because it literally took me 10 years before I made that first deal. But if I had a mentor, I more than likely would have done something within like the first 3 to 6 months easily.
Yeah. It's so easy, especially in real estate, because there's so much to know. It's very easy to just, as you said, get stuck in analysis paralysis, consume education, and just get stuck in the cycle of thinking you're making progress, but not actually, picking up the phone and giving sellers a call or looking at properties or anything like that. So reaching out for a mentor is so crucial. Getting that action, just going out there, getting shit done, getting your first deal done. Great advice. All right. Next question is about your business. The first 3 positions we hire form the foundation of our company. So what were the first 3 positions you hired for, and would you do it differently if you did it again today?
When back when I was flipping houses or rehabbing houses, I hired an acquisitions manager, a deposition manager, and then I was back then I was the guy that raised capital. So because that was the thing that I could have hired somebody to do that, but that's what I wanted to do. I was really good with talking to people. Because it is my company, it is my face, right? So I want to represent it correctly. And now, even with this note business, it's I guess I could hire a acquisitions manager, and also a deposition manager. But really, this note space is so small, so to speak, with just the people that I don't really think I need it right now. But if your listeners are within, like rehabbing properties, and they want to take it to the next level, I would 100%, hire those 2 positions right out of the gate, and then also hire a VA to help you with your marketing and follow up 100%.
Nice. I love it. All right, let's talk about locations. The U.S., it's a big place, a lot of opportunity out there. Give me the single metro, the single city you are most excited about investing in today.
Well, I would say, really the state of Texas, just because it is a fast foreclosure, on it. So, when you take a property back, you could literally, I think 1 to 3 months at the most, right? So it's pretty quick versus, some of the other states. Ohio, I'm in Cincinnati, Ohio, and it could take anywhere from 12 to 14 months in order to foreclose.
Jeez.
So, and that's why, and I look at the the judicial states versus the non-judicial states to make sure that, when I do buy these properties, if there's a chance of me having to foreclose, then I know what my time frame, my holding costs are potentially going to be.
Yep. Makes sense. All right. Next question is about finding the deal. So what is your favorite way to generate leads and to find your next deal?
Yep. My favorite way is LinkedIn, doing a connection request with asset managers and wholesale whole loan traders, and also other note investors, because other note investors, a lot of times they don't list their properties on that low hanging fruit website like PaperStack. So they have other notes that they're just sitting there. I mean, I just had one where I just those 3 that I bought in my self-directed IRA, he didn't have them listed on anything. It was just a conversation that I came across him on LinkedIn, and we struck up a conversation. And when I purchased a couple of notes. I'm in the process of looking at 6 other notes he has for sale. But
Very
LinkedIn
cool.
is vitally important.
Yeah. I'm not huge on social media, even though I have this podcast. I don't really get out on social media a lot, but LinkedIn is definitely the one. It's my favorite. I feel like it's, especially for business, you make great connections. I feel like the content there is really useful. So I really like LinkedIn as well.
Yep.
All right. Next question is about mentors. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
Yeah, I would say I actually have 2. One would be Sabrina Allen, and the other one is Scott Carson.
All right. They're note investors, I'm assuming?
They are.
Nice. Well, shout out to Sabrina and Scott. Thank you for helping Larry get to where he is today. Leads us to the second to last question. Not all deals work out, and those deals that do fail are the ones we learn the biggest lessons from. So what was the biggest lesson you've learned so far in a real estate deal today?
Well, yeah, I would go back to the foreclosure, when it's easy to make the money on these deals, right? But then when you have things go sideways, how do you handle that? And then that also shows you the kind of, at least, for me, the kind of man I was, right? And during that time, I did not like that person at all. But it's one of those things where it's bittersweet going through it, because it made me a much better person and a better investor. So, if I had to do it over again, I wouldn't want to go through it. But having gone through it, it made me a much better person.
Yeah. You never wish hard times on people, but then again, you're glad when they happen, because afterwards you realize what you learned. So what was the big lesson that you learned in the 2008 issue? Is it to make sure that you have a bigger cash flow margin? What is the big lesson that you think you take from that?
Yeah, for me back then was, I was trying, I had a private lender at the time, and so I would refinance these properties and cash him out. So essentially he was a hard money lender. And so now when I eventually got back into doing, I rehabbed a couple of houses, I totally changed that model. And, it was like, I had very specific paperwork that said that, you won't get your money back until the exit plan is to sell this thing. And then that's when you'll be cashed out. Right. Okay. So instead of trying to refinance it and then cash him out or her out or them out, right now I have a very specific model where, not with these notes, but when I was doing the rehab, that when I actually sold the property, you would be cashed out. Now with the notes, it's if I don't have a performing loan, then I don't have to make payments to them. So that way I'm not strapped, for cash each month, because you may have a period where you're more liquid than you're not, right? So, I've just totally changed up the way that I invest, to where I make it beneficial to both parties.
Yep. Yeah, I feel like that is a super good lesson that I have been actually keeping pretty close to, and I'm proud of that. Is I make sure that I have enough cash reserves. And when I first started out, I didn't do this. In fact, I just backed out of a deal yesterday, because if I had gone and taken that deal down, I just would have been too thin. I wouldn't have had enough money in my bank account to feel comfortable. It was a good deal. I would have been happy with that deal. but it's just, it was a little bit too thin. And so I feel like that's a really good lesson to have, is to have cash reserves more than you think you need, because shit can hit the fan. You don't want to have to go into foreclosure. You don't want to have to deal with that. So
100%. Yeah. I
Yep.
100% agree with that.
All right. Well, that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
They can just go to my website. It's ljhinvestments.com. Or they can just, if they want, I guess, any more information about the notes, they can just schedule a call with me, talkwithlarryhoffman.com, and then that'll take them to a Calendly link, and they can just book a 30-minute call with me.
Cool. I will put those links in the show notes. So if y'all want to reach out to Larry, just go ahead and click the little more in the description. It'll pull down the full description. In there, you can find those links. All right, Larry, that wraps it up. Thank you very much for hopping on the show.
Oh, thanks, Gabe. I really appreciate it. Thank you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. I said this on the last podcast as well. The last course I made about finding deals seemed to be appreciated by people who took it. And so I'm looking for new topics to create courses on, because I enjoyed it. I enjoyed the process. I like interacting with you guys who took them. So if you guys have anything you want to learn about, learn deeper about, just reach out to me. Let me know. Love to make that course for you. So that wraps it up again. Thank you guys for coming and staying with us on this podcast. And I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.